Howdy, everybody. Welcome to Liberty Call. Today is Thursday, December 5th, 2020. Oh, hope you're having a fantastical day out there in the interwebs. My main man, Jake, is getting comfortable for the next 10 or so minutes while we go through the news. And then we're going to go outside because it's another beautiful day here in Colorado. It's not too hot, not too cold. Well, it's a little chilly, but it's December in the mountains. So, I mean, you can't really be that upset when it's, in the 50s. So anyways, I hope you're having a great day. And before we jump into the markets and the numbers, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty, let's hop into it. All right, where are we? Starting out with the Dow Jones, it was down 0.55%, 248 points, closed at 44,765. S&P 500 down 0.17%, 10 points, closed at 6076. NASDAQ down 0.16%, 32 points, closed at 19,702. The VIX was up 0.59% today, it's at 1353. Canada up 0.15%, Brazil up 1.34%, and Mexico up 1.08%. Let's see here. In Western Europe, Germany was up 0.2%. The UK up 0.16%. France up 0.37%. In the Netherlands, up 0.13%. Spain up 1.57%. Italy up 1.59%. Switzerland down, or it's kind of flat, down 0.06%. Portugal up 0.57%. Russian exchange is back in the green today. The MOEX up 1.03%. The RTSI up 1.87%. And the Asian markets, the Nikkei was up 0.38%, Australia up 0.15%, New Zealand up 0.45%. In China, the Shanghai was up 0.13%, the Shenzhen component up 0.29%, China A50 down 0.51%, DJ Shanghai up 0.14%, Hang Seng down 0.92%, and the Taiwan weighted was, where was it? Up 0.05%. All right, so those are the markets for today. Feel smarter? I know I do. Let's jump into our market recap. S&P 500 inches higher ahead of key jobs report. Well, it was higher until later in the session when this article was written a little earlier today. All right. The S&P 500 closed slightly higher Thursday as investors, well, I guess lower now, as investors evaluated mixed labor market data, retail earnings, and Bitcoin's historic climb above 100,000. Jobless claims rose to 224,000 last week, surpassing expectations of 215. Despite the increase, analysts maintain confidence in the labor market's resilience, anticipating a rebound in Friday's non-farm payrolls report. Expected to show over 200,000 jobs added in November after October's weather-impacted gain of only 12,000. So we only have 24 hours to wait. I know I'm going to wake up early just to see the jobs report. Not really. All righty. Let's see here. Federal Reserve Chair Jerome Powell highlighted economic strength, supporting the Fed's cautious approach to monetary easing. Goldman Sachs forecasted consecutive 25 basis point rate cuts in December, January, and March, with further reductions mid-year. So they're going to take, okay, they've already gone down 50 basis points. They're going to go down another 75 basis points between now and the beginning of the second quarter of next year. So that's 1.25%. Inflation is not down. We have seen zero deflation anywhere. And I mean, economists and the government and those who run big business are so terrified of price deflation that it's going to create a vicious or downward spiral and the world will collapse. No, it won't. I mean, it may go down for a while. However, things will stabilize and we will recover, hopefully with a lot less debt and more financial response or fiscal responsibility. Sorry, get my blood pressure up to here. Let's see here. Retail highlights or retail earnings highlights. Dollar General gained 3% after surpassing Q3 revenue estimates despite trimming its annual profit forecast due to hurricane-related costs. Kroger fell 1% after missing Q3 revenue expectations. I've been doing my part, Kroger. I shop there every week. American Eagle dropped 14% following a downward revision of its annual sales growth target amid erratic holiday apparel demand, and Five Below rose 11% on strong quarterly earnings, an upgraded full-year outlook, and a new CEO appointment. Travel and crypto updates. American Airlines soared 16% after raising its profit guidance, citing robust travel demand and pricing power. Bitcoin surpassed 100,000 for the first time last night, fueled by optimism surrounding President-elect Trump's pro-crypto policies and SEC Chair nominee Paul Atkins. Analysts suggest this could end restrictive regulations, with Bitcoin potentially hitting 200,000 by late 2025. However, crypto-related stocks like Coinbase and MicroStrategy lagged behind. If I could, I'll finish that thought in a second. Finishing up, as labor and retail dynamics unfold, market attention pivots to Friday's payroll report and ongoing crypto momentum, which could shape near-term sentiment and broader economic trends. So if I could pause here, I had a couple of clients in our end-of-year meetings in October and November talk about, ask me about crypto, specifically Bitcoin, what my thoughts were. Granted, I'm not an expert at it. It's basically another security in my mind. And, granted, it can less be monkeyed around with compared to other securities. It could go either direction, up or down. So with the price as high as it is right now, probably wouldn't say just dump all your assets into that and say, well, let's hope for the best. Because if, say you have a 30% pullback, that's not good. So, what I've, recommended or suggested to, most folks was put whatever you're comfortable into Bitcoin, and your comfort level should be, I could lose half or all of this within a year. And then start dollar cost averaging on a weekly basis, whatever your number is, $50, $100, $20, just make those incremental purchases every week, or every other week, twice a month, once a month, whatever it is. That way you're dollar cost averaging into a rising market. And, if, the price were to go down, you're actually buying in a falling market, which you're getting more not shares in Bitcoin. You're getting more percentage of coin with your purchase if the price goes down and you're buying in dollars. So anyways, there's my Bitcoin tip of the week. It also, before I jump into the next article, could go to, from 100 to 200 in, 6 months. And then I look like an idiot saying, well, you should be careful with your money. And, then somebody's going to say, see, Ray, you don't know what you're talking about. It's like, well, if it went down to 50, then everybody say, well, that's pretty smart of you to be careful and, dollar cost average over time, So anyways, you're damned if you do, you're damned if you don't. All right, let's get to some data. October international trade. This comes to us via First Trust. Mr. Strider Relas wrote this report. The U.S. trade deficit in goods and services narrowed to $73.8 billion in October as imports fell more sharply than exports. Total trade volume, imports plus exports, easy for me to say, a key indicator of cross-border economic activity, declined by $18.5 billion, reversing gains from September. The prior month's surge likely stemmed from companies stockpiling goods ahead of the anticipated dock workers strike. Remember that a couple of months ago, which ended rather quickly in October. Trade trends and shifting patterns. Total trade is up 3.3% year over year, with imports rising 4.4% and exports increasing by 1.9%. However, October's sharp decline raises questions about whether the drop reflects strike-related volatility or signs of broader economic weakness. Year-to-date imports from China have grown at a modest 1.7% versus 2023, but remain 21.3% below 2022 levels. Once the top U.S. trade partner, China has ceded its lead to Mexico, with Canada close behind. Supply chain pressures. Global supply chain pressures continue to diminish. The New York Fed's Global Supply Chain Pressure Index in October was 0.3 standard deviations below its historical average, a stark contrast to October of 21 when it peaked at 3.9 standard deviations above average. And petroleum strength. The U.S. remains a net exporter of petroleum products for the 29th consecutive month, reflecting continued strength in the energy sector. Labor market. Initial jobless claims rose by 9,000 to 224,000 last week, while continuing claims fell 25,000 to 1.871 million. Non-farm payrolls are expected to increase by 222,000 in November, with the unemployment rate ticking up to 4.2. The narrowing trade deficit, easing supply chain pressures, and strong energy reports reflect resilience, but economic uncertainty persists amid shifting trade patterns and softening labor dynamics. So it's kind of a mixed bag, Imports are down. China's not getting as much of our business over the last couple of years. I'm indifferent on China. I mean, some of their stuff is okay, but several places I've been listening over the last week or two, people have made the comment that things aren't as good as they used to be, back 30, 40, 50 years ago. You could buy, a refrigerator. I think the fridge in my dad's house, I mean, he's lived there since 1978. And it's the second fridge. We had a avocado green one. It was a top and bottom when we first moved in. And then a year or two later, we got a side by side. Easily, the earliest they bought it was probably about 1981 or in 1982. And that thing is still cooking. I mean, not cooking, it's cooling, but it is still working. And, things just worked better and, lasted longer. I mean, the first car I ever drove was a 79 T-Bird, and it was 10 years old when I started driving in 1990. And, granted, it was falling apart, it had its own little problems. 70s vehicles weren't the best, but the body was still in shape until the day that my dad towed it off. And that wasn't, probably 15 years ago, because he kept holding on to it like I was going to want to do something with it. I'm like, that car was ugly when when y'all bought it in 1978 in the fall. And I didn't like it then. I didn't like driving it. That's why I bought a truck as soon as I could afford it. So anyways, one last article here comes from our friends over at the Mises Wire. Want to cut federal workers? Just cut spending. Yeah, I've shared a bunch of articles on my personal Facebook about the very small percentage of federal workers actually come to work. It is hysterical. Basically a daycare service for people who can't cut it in the real world. All right. Elon Musk's Department of Government Efficiency is making headlines with plans to reduce the federal workforce. However, federal employment numbers are a poor proxy for government size. While the number of regular federal workers has remained flat for decades, declining from 3.1 million in 1990 to 2.9 million in 2023, federal spending has grown exponentially, fueled by vast networks of contractors and grant-funded workers. And if you're from my part of Houston, down in Clear Lake, contractors everywhere, because the Johnson Space Center is right there, and you got Boeing, Lockheed, Raytheon, SpaceX is there. Over the years, Jacobs. I have either worked with NASA employees or, more often than not, contractors, because the contractors work for regular companies. They're still sort of on the government dole, but it's basically like working through an outsourcer. My first job after I got out of the Navy, I was working through a company called AccuStaff, which it's basically like job placement and like a temp service. And it was not terrible. I worked for AT&T Wireless, and that's who the contract I worked on for about 10 months until I got a job with AT&T Universal Card as a full-time employee in collections as opposed to customer service. So, which took me down a different path in life. All right. Let's jump back in. The blended federal workforce, the true scope of government employment includes more than 9 million people, 2.1 million federal workers, 4.1 million contractors. So there's basically 2 contractors for every federal employee, 1.2 million grant-funded workers. I'm not quite sure how those fit into the scheme. And then 1.3 million active-duty military personnel and 500,000 postal workers. Granted, the postal workers are somewhat self-subsidized by postal fees and, you paying them to move your crap around the country. But they still overspend by a few billion every year. And that, usually there's an article in the fall saying, well, the post office overspent by this and you, the taxpayer, are going to have to pick up the tab. I think that's the problem. They could be self-sufficient if they just ran their business better. But my postman just drops a box in the snow. What was that, last Friday or Saturday? Just drops it in the snow out by the mailbox. And it was we'd ordered new Roku devices for our house because we went away from DirecTV satellite to DirecTV streaming, which saves us about $100 a month. Hey, free money. And the extra receivers, we'd ordered one just to see how it worked, and then it worked fine. So then we decided to do the rest of the TVs and turn off the satellite service. But yeah, I come home from bringing my wife to the airport Saturday afternoon, and I didn't see it because it's a white box sitting in the white snow, and had to walk back out there later on and grab it. So I like UPS, I like FedEx. They bring the stuff up to the door, or at least up to the garage, and set it down. Postmen, they just leave it on the floor. All right, contractors and grant workers dominate this workforce, outnumbering civil service employees by a wide margin. These workers, many in aerospace and tech sectors, operate as de facto government employees funded by federal dollars, and that's why they should not have a vote. If you work for the government, you should not be voting because you are the help. Despite promises to shrink government, federal contract and grant spending soared during Trump's first term, adding 2 million workers. Federal contract awards grew over 40%, particularly in defense, transportation, and health sectors. This trend continued under Biden, showing bipartisan reluctance to address ballooning spending. That is the one thing that the left and the right will hold hands on, is spending more of our money, because it's not theirs. I mean, these people don't pay taxes. They work for the government. They just steal it from us, and then they get to invest it and know exactly where the investments are going to go. So they, front run the market, and something I'm not allowed to do. I don't know why. All right. What DOGE should target? Focusing on federal payroll reductions without addressing contract and grant spending misses the point. True workforce reduction requires cutting federal spending. Reducing budgets would eliminate millions of federally funded positions in both private sector and state and local governments. The bottom line, the size of the federal workforce is a distraction. Real reform lies in cutting spending, which will naturally shrink the government's footprint. Without significant budget reductions, efforts like DOGE risk being little more than a political theater. I agree. We need to actually just go through. I actually kind of cheer for just the government to fall apart, because then there's no going back. You can't put it back together. I mean, when the Jenga tower that's, as high as the old World Trade Center comes crashing down, you're not putting all those blocks back together. And I think we would just go, let's just stick with the states at this point. And everyone would get a pay raise, because then they're not, those, the 30% of people who pay taxes in America, we would get a pay raise. The rest of y'all would be out on your ass and probably starving. So, but at least it would give you some motivation to go get a job and some skills. All right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there, so give me a call. I'd be happy to help. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.